Take a closer look at the markets. JJ Kinahan is here. He's IG North America's CEO. JJ, how would you fix Starbucks?
Hey, Kelly. So it's interesting. I just saw a podcast with Howard Schultz, and he said kind of what Andrew said. What made them great was the experience, and he's trying to figure ways to bring that back because that's what they've lost. And now to the point I think you were making there, Andrew, they are just another transaction. And he used the word community. He said, we built our business around community, and the community is what's lacking right now. And if you look, they're one of the companies that just came out and said they are afraid for the consumer. And if the consumer doesn't feel that sense of community, I think they do have some tough times coming up. And hey, maybe my retirement plan, Andrew, will be being a greeter at Starbucks.
I'll see you there, Jay. I always want to be at Walmart.
Well, they've also, by the way, they've priced everybody out of the market.
Yeah, and it's all like
and they could do. I would do drip coffee for 99 cents, literally, just to get people in the door. It's the highest margin product that they sell, just black coffee, just to get people in and not make people.
Is the lowest margin product they sell, or the highest?
No, that's the highest.
Coffee still is, not
black
like the bubble
coffee
drinks or whatever?
No, black coffee is the highest margin drink because there's nothing in it.
You give that up just to get people in the door?
You just give it up to get people in the door. You try to make people feel that there's a value, but you also do it without trying to cheapen the brand. That's the other thing that's happened. It feels that everything's been cheapened because all of the things. There's always a sale. You're always getting these notifications every 10 seconds on your app that they've got, half price this and that. That doesn't make you feel like you're at a high value operation.
Not at all. You know what, JJ? I find. Go ahead.
It's why I think all the, I'm sure you guys are experiencing it there too. Think of all the independent coffee companies that have popped up even since COVID, et cetera, and they are competing and taking market share away because they have been able. A lot of these smaller, 1 or 2 person shops have been able to get that sense of community. People hang out there, et cetera. You just don't see as many people sort of hanging out at Starbucks as you did at one time, and it's become very transactional.
Other than the high school groups in my town. Anyway, JJ, what I was going to point out about this is a week ago, at this very moment, I think the VIX was at 65. And here we are talking about how Starbucks should change itself. What an odd market is that?
Yeah, if you went to sleep a week ago Sunday night and you woke up last night, you would have been like, wow, last week must have been a really humdrum sort of week.
Right.
And what's really interesting to me on the last week, though, Kelly, is when we see markets like this, what often happens when the market collapses is you see retail traders, the first place they tend to go is things like SPX and SPDR. So, the indexes or index-related ETFs. What was different about last week's is what we saw a lot of our clients do is go and start buying stocks or selling puts on stocks, taking advantage of the high volatility in order to play for a snapback. So I found that behavior odd compared to other weeks. And so, one of the 2 places, it really is programmatic almost. The 2 places retail tends to start, Apple and Microsoft. We saw it again, great companies, great cash flows. The other companies, they went to, Goldman Sachs and Coca-Cola. Again, similar profiles. But so that was, to me, one of the most interesting things is there was a change in behavior where people viewed this as a buy the dip mentality, much more than a, run around screaming with the hair on fire mentality.
What do you do now then? Because a lot of people have suggested, and I'm sympathetic to the idea that this whole story still has a few more innings left to it, but I don't know.
Well, usually these things don't just end so quickly and it's, all's back to normal. I do think one of the side effects you'll see, if you think about it, the VIX was trading at a, under 15 level for so long. As we speak right now, it's right around 20. I would expect the VIX to stay near this 20 level for a lot of the rest of the year as people are taking into consideration again, hey, the market actually can go down. We just hadn't seen it that quickly and seen volatility explode that quickly in quite a while. So I would expect the side effect to be that people are a little bit more respectful of the downside than they had been to this point. And let's face it, there really was no reason to be. The market just kept going straight up. But I also think people are reassessing their portfolios. Some of the names that got momentum, if you will, just because they were involved in AI, et cetera. I think one of the things you saw from this earnings season is how are you actually going to monetize AI? All right, you put all this money into it. What's going to happen to it? And I think sort of that free pass, if you will, is gone for many stocks going forward.